your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I'm going to go through some numbers here just for some fun. I like doing this kind of stuff. I hope you do, but it's a lot of history of the market, which I've studied for quite a bit. This is August the 25th of 1987. It was known as harmonic convergence. It was supposed to be the end of the Mayan calendar. Some people were calling it the end of the world. For the bulls, it was, at least for a year. But we made a top here on August the 25th. We came down for 13 days into September the 13th, which was a solar eclipse. Then we rallied up for 6 days into the Venus-Uranus aspect on October 2nd. And then the big crash came from October 2nd to the 19th. We dropped 30-some%. We dropped 15% in one day. And that was, you can imagine 15% in these days. But anyway, this is just showing you what we're doing here. And Shane was kind enough to show us how these things work. I'm going to be talking about them a little bit more, but let's get this up here because someone sent me this, which I think is interesting. It goes with a long-term history of these things that we're looking at. These are Peter Novak. He's a MAG astrologer. I don't know exactly who he is, but he's pretty famous. It just shows that when you have these three outer planets, these are the big ones that we're looking at right now, that there's some big things happening. But look at during the time here of the last 200 years. We've had more and more of them. We don't know. I don't know what that means. All I know is I just look at these, and if they look like they're coming up to be a place where the market changed other times, I use that as a guideline that, yeah, it worked once. It's probably going to work again. So that's what I'm watching here as I watch these things here unfold. Okay, here's what I'd like for you to do. Now, we started this country in 1776, okay? But let's start back to we had Andrew Jackson as president. In 1837, right when he was leaving office, he abolished the Bank One. I think it was First Bank of the United States. I forget to get the name of it. It was basically the Federal Reserve is what it was. He abolished it. That led to the Panic of 1837. Okay, the Panic of 1837, if you add 92 years to that, that takes you to the top in 1929. But in 1913, the Federal Reserve was reinstituted on Christmas Eve because there was hardly anybody in the Congress. They passed it through, and there was our new our Federal Reserve Bank. The bank for bankers has nothing to do with the Federal Reserve or the federal government, but that's how it all started. That market went up for 16 years, folks, from 1913 to 1929. Now, we go down into 1932, you add 92 years, you're going to take you up to, it's actually between 2024 to 25. I know we're in 26, but when you're looking at a cycle that long, it can stretch out for a few months. And that's what I think we're watching right now. Now, if you go to 2009 to 2026, where we are now, it was up 17 years. So in 1929, the bull market lasted 16 years. This one's lasted a year longer. And you can see that's where we are now. We got all the things happening that was happening back then, all of it. It's the same stuff. I don't care whether it's, back then it was radio, television, telephones, refrigeration, indoor toilets, air travel. It was everything. But now we've got artificial intelligence, and boy, oh boy, is that doing good. Plus we have ETFs more ETFs now than we had in stocks. So we're over something here that's pretty big. So let's move on here, cover some of the other things that you guys like to look at. All right, let's take a quick look here at some of these stock markets. Oh, there's the one I recommend. This is a short sale in the hello, operator, in the Treasury soybeans, March soybeans, and I'm using that as a prelude against the oil, because the oil is much stronger, so you want to sell the weaker. So that's why we would be doing that one. Okay, now there's the S&P. You can see here we've got lower tops coming in here. The actual market topped here on the 28th, folks. Remember, we had that big date on the 28th. We had the 135 pattern in here. The Dow Jones went up higher. You remember? And that's mainly because of, half a dozen stocks that were very, very powerful. Caterpillar, Goldman Sachs, Walmart. I mean, there were just a bunch of them that kept going higher, but so far that's slowed down just a little bit. Okay, now we're going to take a look here at the YM. We're going to bring this over here, bring this up to see what we're going to do now is we're going to put the hold on, we're going to put the hourly 4-hour chart up so you can see what was happening. All we did yesterday was make a beautiful Gartley pattern, exactly A, B, C, D, just a shy of the 61. Now you see we're coming down here, going to go, and we're quite a bit below the 5,000 level now, but that's still a little bit early. Now the next one we want to take a look at here is the Russell, and we'll get it up here. Put that up on the 4-hour for just a second, and you'll see where we are. Come over here. All we did today was go up and make that ABC. Oh, excuse me, that was yesterday. Today we just broke down a little bit and we rallied back up to it looks like about the 61% retracement sometime earlier today. Let's put that 8-minute up and we'll see if that's what we did. That's pretty much what we did right there. Went right up to the 618. Now we're starting to drift a little lower in here. Okay, now the next one we want to start off with, we've already done the YM. Let's make sure we did that again. Did we just make an ABCD there? My God, I'm going to have to buy it. Boy, it's pretty close. Let's just double check. When I see an ABCD, I just go ahead and buy it. I don't care about cycles. They don't make it. ABCD means something to me. The other cycle stuff does not. Yeah, we came very, very close to hitting it, but still not quite there yet. But we'll see if it gets there. Still a little bit early here. It's still following too nicely, and you can see it had a high in here. You had a high in here, and you're just having a little rally back. Now we made new lows. So if you go by the rules that we go by, after you make a new low, what do? Raise the hand. Where's your little placard back there, Johnny? You want to look for the 382 retracement of the move. So there's your high right there. Watch for the 382, and here it's coming in here at 2438. We're 10 points away in that, so we should reach that, and then we'll find out if it has real legs to get this thing moving either farther to the downside. All right, we get these out of the way here. And we're going to take a little break here, and I think just a second here, we're going to talk about Apple before we do that. So bear with me here 1 second, and we'll get the old Apple. Let's check to see if that bean oil is still going higher. It's still about the same. All right, let's get over here, and we'll take a look at Apple. And it is overshot that one a little bit. And here we are with Apple. We'll be back, and we got to talk about SanDisk, the stock chart of the day.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
All right, folks, this is SanDisk. You can see the low was back here on when President Trump was in the Rose Garden about tariffs. Remember, that was April the 8th. That was the bottom at 27. God, 27 to 735. That's better than 20%. You can see here the pullback here was just almost exactly 382, and then it exploded up to this level right here. Boy, that's a once in a lifetime. That's like the silver move, folks, from 27 to up in that level. So it's probably, I don't know where it's going to go, but it's out of my bailiwick, but looks like it's not going down yet. So hang in there. Might be going higher. All right, let's take a look here at a couple of the other things that we're watching here. This one is the crude oil. I wanted to bring this up to you to show you because the whole world has been watching these last few days, and I wanted to bring it to your attention here. I was looking for this ABCD pattern to occur right here. We had this big drop here. Well, for day traders it was $1,000, and then we went right back up again. There's no ABCDs in here to cover that, so there's not really much else you can do. We have the nice run up. Now we're pulling back. Let's see what the 382 is on this, because if it's really bullish, it stopped right there so far, but it's coming down again. That means it's getting ready to break through it. That's my guess. But again, it could hold right here. But I assume it's getting ready to break below that because it just looks like it's ready because you got an ABCD going to that level right about there. Let's put our beeper in just in case it gets down at that point, and we'll see what's going to be happening from that level here. Okay, now let's move on, and we're going to talk about the euro for just a second because it's coming down just like we expected and getting more bearish as we speak. There, as you can see here, now we're cascading down. There was your 382 on the 17th. I believe we had another one here this morning on this smaller one from this high right to that low right there. It was right on the money. There it is right now. That gave us the ABCD to the downside on this. You can see there's double ABCDs down in here. So this should be some pretty good support. What we're going to do now is look at this on the daily so we can see it better. And there you go. Let's get this cleaned up here, and we'll be right back. Hold on one second, and we'll be refreshed today here. Okay. All right, there's where we are right now. We should be right at the 61% retracement of this move right back here, folks. Let's see how close we are. Well, a little bit more to go. So that's another one that we're going to be watching here so far this morning. Okay, now let's get that one out of the way. We've done that one out of the way. This has been a very good one, by the way, because, you know, we were sold some here, put some back here at the 382. They never stopped us out, and now it's starting to move down. Personally, to me, it looks like it's going to be making an ABCD here. That's what it looks like down here at this 1582, which is your 786. That's what it looks like to me. We're down 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row, so we're about ready to rally. That's for sure. This one, 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 10 days down. This is 9 days down to get ready for a rally. That's all I can say. I wouldn't be selling it here. Fact is, short, but I'm still going to stay with it. If we get much above this 118 level, I'll cover, put it back at the 382. All right, let's get this out of the way here. Now we're going to talk a little bit about the, hold on one second. I want to get the gold and silver up here. First, gold is acting so beautifully, folks. We had a beautiful garland pattern here on the 17th. Let's get it up here so you can see it all together here. Your perfect 61% retracement. Then you have the move here, and look at this. Look how bullish it is, folks. Even though it backs off $100, it doesn't mean anything. It just hits these major supports and just higher bottoms all the way. Now, this is the first time we made a new higher high on the day here by $1, and there was a 786 off of that move right there. All right. Now we see what. Off the high of that one should be right at the 786, 618, right, almost different. It's in a pretty good spot where it should be getting ready to pull back. But this is a pretty big move here in the gold market here. And now we want to switch over and we'll talk about the silver market. So bear with me here. Just take a second and we'll be into the silver. It'll be an easy one to get up here. First, we're going to look at it on the hourly basis. There's where we were yesterday, remember, on the 11th, all right. Then we came to, we'll spread this out so we can see it together. This is absolute perfect mathematics. There's your first 382, there's your second 382. You got another one right in here, but this one is a little bit more. You'll see here, the 382 on this one should have been right here, but it's bearish, because you see you got lower tops and lower bottoms in here, so it's bearish. So we want to see another little pullback, and then we'll see where it's going to go from here. But we should be coming down here just based on this little rally here of 3 days, and we should pull back. Oh, we could be making an A, B, C, D here to the downside. Even that's a possibility. Now let's check platinum just to see, because platinum has been the leader on the downside. Let's just see if it's telling us anything on the upside. So we'll get up here and pull it up, and we're going to put the hourly up, and it is even weaker. It's still weaker. There it is. You can see right there. There's your 382. This one here is a little higher. This looks like it's at the 786. Let's just mark it in so we can see it. Yeah, it is at the 786. Almost exactly. Yeah. It's just shy of that, and then this one should be equal to that. Not an ABCD in sight, folks. It's just drifting once lower. That's all it's doing. There's your move right here. I'm trying to show this move right here the last few days. If I blow that up, you'll see that we did on the back to the exact 61% retracement, banged our heads against it several hours each time, and now we're held up in this area right here. So we're due for correction in the silver and the gold. The question is, how much are we going to get and when we're going to get it? All right, let's move over here, and we will get out of the way here for 1 second. Clean these up here just a little bit, and then we'll move over. We're going to, when we come back, we're going to go over some currencies, folks, because they're moving some of these markets very dramatically. We're going to do all of the big ones so that everybody can see it. Whatever country you're from, Canada, Australia, if you're listening, we're going to do those, and keep us an eye on what we're paying attention to on these other ones, okay? So that's what we're looking at. We got a minute and 17 seconds, so let's cover a couple stocks. First of all, we want to look at the ones that have been running this rally in the Dow Jones. And the first one, of course, has been the strongest of all, has been Caterpillar. As a matter of fact, it is on a percentage basis, it's actually done more than Goldman Sachs has. You can see we got all the way up to 790. We're now 38 bucks below that, so that's probably that high has been in. Let's see how much Goldman Sachs is in today. It should be down a little bit, very little. You can see there's today's action. It was just down, drifting down, not doing too much to that. So we've had a pretty top in here now, I believe, in the Dow Jones. We've already pointed it out to you. We're going to do it again right now because it's that important. And then we'll be right back and cover some more stuff, okay? So stay with us and we'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, this is the British pound. You can see this is a 4-hour chart. We had the big top up here. If you remember, there was your 382 retracement. Now we have the ABCD heading down. But it just announced here on Bloomberg, I was looking out of the corner of my eye, that J.P. Morgan is suing President Trump for fraudulently blaming Jamie Dimon for releasing his accounts or something like that, whatever the heck that means. Anyway, a story in 2004, I was with Mark Douglas, and we went down to Mexico City. Rich Anderson was there, and his friend was giving a speech, and his friend was Jamie Dimon. And so the four of us went out to dinner afterwards, and I get to know, I didn't realize, and he was the big shot. He was a really handsome fellow. He had gray hair then, but it was nice enough to pick up the check to fulfill one of my favorite requirements. All right, now notice here on the British pound, we're getting close here. This thing is just about a little bit more to go. We got about another 1.5 to go here in the British pound, and that's when you want to be watching it. Look at these little 382s that are certainly tradable. See that? That's just for the last few days. Stops exactly. Let's just blow it up and show the folks how important that 382 is. If you just follow that puppy, you're going to take you to the promised land. I'll tell you, it's a good one. There it is right there, and you can see we're still heading down. That means we're getting down into this area here about another point or so. Then we'll have a good rally. Looking at it on the daily, you'll be able to see it. There it is right there. There's a number we're looking at, 133.15. So nothing, no mystery there. So let's keep a close eye out here on the British pound. The next one we're going to take a look at is we're going to go down under and look at the Aussie and see how it's doing. It's been getting hit recently, as I recall from the news. Yep, it certainly has been. As well, it's been drifting lower here now for how many days now? Let's see. There's our high was made way back here. That's not coming down too much. It's well, since the bottom in back here in February, you can see it's actually just below the 382 right now as we speak. Just draw that in, and you'll see where there. Well, it's at the 50% level right here. There's your first 382 retracement right here. There's your ABCD 382. That's a really nice one that you want to be looking for. Anytime you get an ABCD in a new bear market, that's what you want to be paying attention to, okay? And there's where we are. We made it a lower low, so let's see if we came down to 382 again, and you'll see that's not the one we want to use, Larry. Get it out of the way here. Let's blow this up. I hope this repetition helps you, because it helps me, because I look at these things. There it is right there. Went to 50%, and then it's still been drifting lower ever since. Now, the last one I want to do is the Canadian, we want to do the Canadian dollar and then also the Japanese yen. We'll do the Canadian dollar next here. This is the hourly, and it's been the dollar, U.S. dollar has been very strong against Canada, because it's going to be our 27th or 51st or 98th whatever it is. Okay, here it is on an hourly chart. You can see we're almost at a big ABCD here, folks. We'll just, why did that do that to me? Not to worry about it. You'll be able to see it anyway. There it is right there. There's your A leg. There's your B leg. There's your C leg. And D leg is almost there. We're up 147, just another 80 pips or so. Should be a really good spot. So I want to get that put in there so I don't forget it. And you can see here, market's had a pretty big run here on the upside. It had a couple of 382s retracement, one here and one here, and now even one there. So it's still on its way up. 137.412. That's what I think it is. Now we'll come over here and we'll do the last one, which is the Japanese yen, because all the boys that like to borrow money to trade, that's where they go to. Having a little bit of a bounce here today. Hold on one second. We are up a little bit where there was a 382. There's your 50% level. So we're in an area where it's going to be pretty tough to get through this area right here. There's not a good ABCD here. Well, there's one small one, but that's not very it doesn't go over, just absolutely explodes through it. So there's not much here. So it went through the 382, stopped at the 50%. So 2 days now, Well, early this morning and then again later this morning, it's tried that 50%. So there's a little resistance coming in here. So I'd look for a little pullback in this, and then I would be ready to buy it. Is what I would be doing here with this dollar yen. Okay, now we got that one cleaned up, and we got the Australian dollar cleaned up, and we've got the British pound cleaned up. Let's bring there's the gold. And what we're going to do now is to tile vertical to see if we have our usual group of suspects up here so we can see what's happening. The NASDAQ is drifting lower. The S&P is drifting lower. And we're going to find out where we're going to be going here pretty quickly on some of these things. And I think it'll be really exciting to see this. There's our bean oil here, same thing. Folks, the thing that's so important about this is that the fact that when you're watching all this happening, what's really happening is, let me get this up here with the, I got to do it a different way here. I've got to get in the back door here. And here's the trading view. Get trading view up here. I got to get rid of this thing. This is the Dow Jones index itself, the Dow Jones Transportation Index, okay? This is the one that we're dealing with because I don't know how to get rid of it. Oh, here's remove. There, got it out of the way. Just see what I'm watching here, and you see, oh, brother. Come on. We're going to come in here to monthly because this has got all of these ABCDs are happening, folks. You know, they're there. I mean, there are just so many of them. You can see them. You can go back to 2009. That's what I've done. See, went all the way back to 2009. Look at all these ABCDs that are here. We got A, B, C, D, A, B, C, D, A, B, C, D, and there we are right now at 23,000. That all measures we already showed you, 23,200. The high's been 23,512, and we're trading quite a bit lower than that right now. So we're close, and with all those stelliums coming up, oh boy, look at my chops. Sometimes you get sticky fingers, but that's the way it goes. All right, let's move on over here and catch up with some of these other things that we've been watching here this morning. Okay, NASDAQ still moving a little lower. We haven't made a new low in the S&P yet, but we're within 7-8 points, so could easily do that. And then we're moving at euro still going lower. Soybeans right in that area. We want to be shorting, but we shorted these here at 39, folks. Instead of doing the oil, we shorted these at 39. The reason why, this measured the 52, it's at 58, but this is weaker than that one. It hasn't even taken out the high of the day. That's the one you want to be short. So that's why we're keeping an eye on that one as we watch this unfold. Russell's starting to weaken up a little bit, but it has been one of the stronger ones. But as we say, sometimes the stronger turn to the weaker. We'll take a break and we'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, several people have asked me, how long has it been? Do I have to wait to see if things are going to work? Well, first of all, it's working a little bit. The market topped on January 28th, the short side of the market. We thought NASDAQ would be the weakest, and it certainly is. Now we're coming in here. We're 3 weeks into that. And by golly, it's down. So it hasn't fallen apart. I don't know if there's going to be a crash or not. I think there is because of all this money that's out there in margin debt. They've never let the young guy get through that. The young traders or neophytes in the market ever get out that easily. All right, let's take a look here at the cattle for just a second. Now you can see here, this has had some big move. This was after the big report, and then something dropped it in one day. To have it drop 10 cents in 2 days, boy, that's just a huge drop. Then we have the ABCD patterns forming. We're going to draw them in right there. We'll assume that this would be right here. Then we got another one here right behind it. I'm going to draw this one in right there. Put that in there. That one's right there. Now we got another one forming here, coming up here pretty soon here. Move that up here, and that'll move it up into that level right here. You can see that just basically, see now we're coming into, we should make a new high here, up around 246 relatively soon here in the cattle market. This is the highest cattle have ever been, folks, in anybody's lifetime or whatever. You can see here. They're saying this was 250. Oh, because they roll over. That's because it's a different contract. That's the reason. Hold on, get that out of the way. So we'll get that out of the way. All right, now let's get out of the way here and talk to you about copper. Someone's asked a question about copper. Excuse me, folks. I'm getting a little choked up here. And let's get the copper up here. We'll take a quick look at it. It had been following pretty nicely with the gold market, then it split off. Copper is right there at the 60 minutes. Should be down today. Not doing very much. But you can see here it's been coming down here for quite a few days now, since early February. You can see we had the 50% retracement and tested again. And then we had the, looks like this was a 382 here yesterday, spot on right at a 382. There it is right there yesterday and today, both days. And that would have been a nice sale because it went from 80 down to 68. That's 12 cents. That's a lot. That's $33,000. They're only risking 400. Not too bad. This stopped right at the 786. So that means there's a little head and shoulders right here from a short-term standpoint in copper. There it is. There's your left shoulder. See how your left shoulder and the right shoulder are the same? There's your head. So the only thing you need to do is to see if there's any symmetry between the two. And by golly, there it is right there. There's a bona fide. Well, it's too late now because it's already jumped 9 cents. but that would have been a good one to look at today. I'm not trading copper, but by golly, that was a nice one to look at. That has everything that you could ask for. Left shoulder, head, right shoulder, okay? Right at the 786, I believe. Let's just double check it. I can't quite reach it. Well, misses it by a heartbeat, but there's your head and shoulders pattern. You wait till that's made, and then you got to buy it a couple cents as it moves higher, and then it's on its way. I mean, it's had a heck of a run today, folks. We've gone from 69 up to 9 cents in copper. That's $2,000 on a trade, on a day trade. But that's got a chance of going a little bit higher. Now, we've had a question about a couple of stocks. Of course, one of them is Tesla. We'll get that up here and let everybody see what it's doing. They're beating it up in certain circles, and others say it's the coming of the next Lord. And there's where we are right here. You can see here we're basically up on the day, been in a downtrend for quite some time. Now from 500 down to 390, then we rallied up to right here to 435, and then we backed off right here, exactly 618, and this is where we're at right here. It has a slight bias. There's no head and shoulders pattern in here. There's no left shoulder. The right shoulder is lower than that, so it could be a pattern there also. Okay, now let's take a look at one other one here. It's in the news quite a bit now, especially today. So Walmart, let's get the daily up. They've just announced that they're going to be the first $1 trillion revenue company. Oh, not today. You can see here today we backed down, gap down from the high we made right back up here. And that's a little bit of various precedents. One of the reasons why the Dow might be a little weaker today, the Dow's down 350. So part of that would be Walmart because it's a $125 stock. I mean, it's triple digit, but nothing like the big ones like Caterpillar and Goldman Sachs and Microsoft. Microsoft just looks horrible. And I just saw the president of Microsoft on. I listened to what he said. And he said, "Oh, things are just great. We've been doing so good. Everything's lined up." And I said, "Did you look at your stock?" And I guess he doesn't. So let's take a look at Microsoft because this is one of the greatest stocks ever, folks. If you bought 1,000 shares, or if you'd bought one share of this in 1986 when it came out in the spring, you would have $186,000 for one share. Tell me that's not a good investment. Okay? Hold on, let me get the MSFT if I can find the M's. EMSF. LMST, we want get up here. There's Softy right there. You'll see we're down below 300 again. Yep, back at 397. At one time, folks, it was $500. Let's just look at the daily, long-term weekly, and you'll see back here we were trading at 555. Here's where we are now at 397. Now, the long-term picture, let's see if that's, no, I don't know if it's a 382, but let's just double check it. Well, that says that's it. All that's telling you is this is a 50%. That's 786, so that's got to be a 382. It just about absolutely happens to be a 382. Nope, 50%. And that the Y is this was 50% also. So it's just repeating that same cycle. Let's just double check to make sure that it is the same. For we're going to go from the high down to your low. Okay, that tells you how much it was moving. Okay, there it is. Now we're going to clone that line, bring it over here, and then double clone. So that didn't work. Hold on just a second. I'm just trying to show you the repetition in the market, folks. That's really what I'm trying to show you. That's what Andrew Lowe does when he does his presentations here. There's your high to low. That's all we're doing. It's got the wrong tool up here, Larry. Shut the front door and raise the rent. There's the one I want. There it is right there. Mark that off. Bring it over here. And it's very, very close to being the same thing. So should be some really strong support here today, folks, right here at this 50% level of this move right here and 78% level of that move right there for Softy. That's right here at 397. And that's the old low back here was 392. So you can put your stops right below that. But that's a very, very strong support here in the market. The last time we had that too, you also did almost exactly the same thing. So it's repeating and we're ready to see it go higher. That's what it looks like. We'll be right back. Stay tuned. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, remember when we're doing this, we're looking at markets that repeat over and over again. They are predictable within limits. Okay, and they repeat. Those are the 2 factors that Andrew Lowe talked about when he wrote his book, The Non-Random Walk Down Wall Street. Now, just looking at the min here today, let's get it to a 4 minutes so we can lose the AI program. We don't need to really see that, but there's your move here in the NAS. Sorry, folks, the mini S&P. Just show you the ABCDs that are here. There's your first ABCD comes in right here, okay? And it goes down to right there. That means you got another ABCD coming here, down here. Sprouts up to your next level here, which is there's 61% of the high. Look at the lower tops, okay? There's your low right here. Now we're having to rally back. Probably, since it's taken so long to get here, we're not going to get anywhere near the exact figure that we want because the market is jumping around, gyrating, but there's where we are from high to low. Comes in right at the 382 right now here in the E-mini S&P. Okay, so that should start to back off from that level because we are in a downtrend. We've only got another 2 hours to go in the market, and it is dropping. And on the longer term picture, if you'll remember, just watching this on the 4 hour, we started to break these numbers. You can see where we are now. So far, this has been the 61% retracement of the whole move. That's why it's held that bottom right back there. We got to 42, missed it by one tick, and now we're 18 points real money, but in futures terms, it's not there yet. So that's what we're paying attention to now. Once we go below 6,700 on a closing basis in the S&P, that's 150 handles from where we are right now. Then there's going to be the lady that has the large size band. She'll be out there playing her tunes, and so we'll be right back.